The Democrats were arguing in their debates as they were determining who their candidate would be. And the interesting thing is, like, a lot of it was pie in the sky at the time, but it's all coming true now post-pandemic. But I want to start with a recent article in an American Affairs journal titled "The Brazilianification of the World Compares Nations Like America to Brazil." And they say, quote, "Hollowed out state capacities, political confusion, cronyism, conspiratorial thinking, and trust deficits have exposed the crumbling legitimacy that now makes rich and powerful states look like banana republics." Are we a banana republic? And before you answer, I want to mention that to the audience, there are some like interference from your like old school sort of like interference on a television screen sort of look on your video.
I apologize about that, actually. So blame Bill Gates. He's probably too preoccupied with other things right now. But yeah, I think that's a problem, and it's not unique to the United States, but the United States is in the front of it. I think it's been a problem for years. About 12 years ago, I think Jamie Galbraith wrote a book called The Predator State, which outlined this Brazilianification. And I think it's continued. It accelerated under Trump, but I'm not sure it will change fundamentally under Biden, because I just think that there are too many jobs for the boys in ensconced in positions of power, and institutionally, it's very, very hard to change that.
We're going to have a few questions along this line, but it seems like the structural situation in the United States is that no matter what you try to do, no matter how good you try to do, the trillions, whether it's like all the bailouts in 2008, everything has to go through the banks. Even the, the PPP loans all went through the banks, and they scooped up billions and billions of the PPP loans, the forgivable PPP loans. It seems like structurally that there are way too many oligarchs and oligopolies between the government and the people, and they take the vast majority of the funds.
Yeah, I mean, this is nothing new. I mean, Eisenhower warned about the influence of the military-industrial complex in his final State of the Union address in 1961. And what I think has happened is that the playbook that was adopted by the Pentagon to effectively make sure that they've got a control over a substantial amount of fiscal resources has now been replicated by other large sectors of the economy, whether that be big pharma, Wall Street, Silicon Valley. And I think everybody uses that model right now. So they're all competing for a chunk of that pie. There's no restraint, but there's no real accountability or transparency as to how it's being spent.
Right. So all this money printing that you'd associate with the Banana Republic and the Brazilification of an economy has been masked to some degree for a few years because policymakers simply say, well, there's no inflation. In fact, there's deflation. But it looks like inflation has come back. Why has it suddenly come back? And is it transitory, like the central bank is saying, or is this more structural, Marshall?
Yeah, that's $1 million question, or I guess given where inflation is, maybe the $1 trillion question right now. But I think that's the data. People are predicating it on analysis of the data, which I would say has a lot of problems in it right now, because a lot of it's still distorted by the shutdowns and the fact that we're in uncharted territory. We've got a lot of parts of the economy that were literally shut down for over a year. So I think it's very hard to make sense of a lot of it. There's a big divergence, for example, between the BLS statistics on the labor market and the continuing claims, which would suggest a much higher level of unemployment. And you don't know how much of that is real, how much of the economy is functioning under the table, if you like, where people are getting cash payments under the table, sort of like you might call it the Brazilification. You might also call it the Italianification of the economy. We won't, I think if we'll start getting a better sense of the real extent of those inflationary pressures when you start seeing more of the wage data. For example, back in April the 11th, we saw that wage gains for the leisure industry were up 5.2% year over year, which is pretty significant. And that's just from the data from, March, we haven't even seen what's happened in May or June right now. And if that starts to accelerate further, then I think inflation will be the dog that finally barks, or the inflationary wolf will finally be right for once.
Right. This money printing and quantitative easing and its contribution via the Cantillon effect to create wealth gaps, wealth and income gaps. And Stan Druckenmiller said he had the best year ever last year. He's the direct beneficiary of this. But the policymakers always come back to denying that money printing causes this type of dislocation. And instead, they always come back with fiscal policy. Right now, the Biden administration is saying, well, we need some more taxes. We need retroactive taxes. We need taxes on unrealized capital gains. But they never mention the money printing impact. Is this, why do they miss the obvious and go with the obtuse? Because in the tax game, I know as a stockbroker for many years, it's not the tax rate, it's the adjusted tax rate. And dealing with a lot of wealthy people, the adjusted tax rate never rises above 15%, no matter what the government does. So why don't they just address the real problem? The real problem is
the reason they don't address it is because it's hard to solve, because you got to take on a lot of powerful people. So that's the short answer to your question. But if you've got an economy, as you pointed out, which is increasingly geared to a smaller and smaller cohort, then clearly you're going to have a less efficient economy, and it's not going to grow as fast as it should grow, because if you're directing most of the gains to those with the highest savings propensities, then you're going to get less bang for your fiscal buck, and that's going to push them more and more into doing more and more things, and that in turn creates a political situation where the central banks say, we've got to offset this drag on the economy via increased monetary stimulus, and nobody stops them because they don't want to tackle the structural problems which cause the difficulties in the first place. And of course, it's much easier to let Jay Powell take the heat. He's an unelected official, than having Congress being answerable for it.
Right. So, this Cantillon effect, we find it very interesting, and we've been reporting on it. And as he says, multi-billionaire Stan Druckenmiller says, in all those years since 1983, when he's never had a down year, this is the best year, and he's had to do nothing. We haven't received any of these Biden bucks ourselves, but we've done very well, theoretically, on paper at least, with our house price constantly going up, right? This has been one of the, it's not been since 2004, 2005, during the heart of the subprime mortgage meltdown, before the meltdown, that we've seen this. But again, so with this MMT, the notion of MMT, and I think you know quite a bit about that, like how do you stop that? Like that, surely the house price is gaining somewhere between 14 and 20%. Like surely that cost way more than the money that is being sent in enhanced unemployment benefits and stimulus packages.